The Fed left rates unchanged. What must be done to get investors off of the sidelines? Here now, Ken Heebner, manager of the CGM Focus Fund, and Bob Dahl, BlackRock vice chairman and global CIO of equities. Good to have both of you with us. You got to hear the statement and at least the analysis of the folks that we had on. Let's go to you first. Ken, what do you say? Does this, in and of itself, what they're doing, modestly upgrading the economic forecast, saying rate cuts are off the table, and what they say about treasuries, does this make you more or less excited about stocks?
I think they're starting to see the signs of the turn in the economy. The ISM new orders index for the month of July was 55. That's a very strong sign for manufacturing. We are now in this country producing far below the level which we consume as we draw down inventories. This is very evident in the automobile industry. We're scrapping cars at the rate of 13 million a year, but we're only selling at the rate of 10 million. So just taking the sales level in the autos back to the level at which the cars are being scrapped would be a big increase in sales. And you're seeing this now with inventories coming down to very low levels. Admittedly, the cash for clunkers is a stimulant, but I think you're going to see a pretty sharp rise in business activity sooner rather than later. And that's going to bring increased jobs and increased spending. So I think there's a bigger turn in the economy coming than people are looking at.
And does that mean, specifically, Ken, another big surge in stocks, which sure up 50% from the low, only up 12% for the year? I mean, fair to give the context there, but do we have a whole lot more upside left?
Well, I think the rise in the market off the 680 low reflects an expectation of improvement in the economy. So I wouldn't say that this is going to make a big rally in the market overall. I think individual stocks, there'll be some positive surprises there. I'd single out Ford. I think basically the company isn't saying much, and I think that there's going to be dramatic news on the positive side out of the Ford Motor Company in the next month or two. All
right, so Ford would be your name to play. Bob, do you agree with his overall view?
Largely, I do. Look, the Fed's got to be feeling pretty good, Aaron. We've got growth expectations for the second half moving up. Lead indicators are moving higher. Productivity's been incredibly strong for a recession. Inflation remains quiet. The Fed couldn't write a script much better than that. Look, it's early days, but I think that things are improving and the Fed's going to stay the course.
And do you have any specific names?
Yes, I would put out high-quality U.S. growth companies. Some examples, Lockheed Martin, Verizon Communications, Philip Morris International are the kinds of names we think will do well here.
And what happens if one of the scenarios we just talked about with the bond gurus comes true, and that is if the Fed really does start to pull back from some of these purchases? I mean, you heard Bill Gross, he did cite an IMF study saying that interest rates could be, frankly, nearly 1% higher if we didn't have some of these programs in place. If they start to take these programs off the table, rates go a lot higher. Does that change your view of stocks?
I think that rates are likely to continue to move higher eventually across the whole curve as we continue to normalize rates, as fear subsides, as confidence comes back, as the economy eventually does better. In that environment, rates will move up. I don't think they'll move up a ton, but enough we need to keep our eye on it. Eventually, the Fed will raise rates from zero. I don't think anytime soon, but equity investors need to be prepared for that. Hopefully, at that point in time, that's when earnings are doing better also.
Ken?
I think there's an important factor that hasn't been discussed. Countries like Japan, South Korea, Taiwan, the Emirates, and Saudi collectively have more treasury securities than the Chinese. And these countries are dependent on the United States for their security. I think that their purchases of longer-term government securities could be an offset to all the other factors that are discussed. And I can't believe that our government isn't on the phone to these countries saying we'd like you to consider our securities at the auctions that are coming. So that's a positive factor. We all talk about the Chinese. These countries that I named collectively are more important than the Chinese.
You're right. It's a way of looking at it that we, frankly, very rarely or never hear about. Well, gentlemen, thanks very much to both of you. We appreciate your taking the time.